Hey guys, in this video today we're going to be talking about how rental property investors have zero limits on the number of rental properties that they can acquire. They can get a loan approval for all of them if certain criteria is met. So we're going to be talking about the debt service coverage ratio loan, otherwise known as DSCR loan, and that's what this video is about today. Hey guys, my name is Aaron White. I'm a realtor and I'm an investor. I was an investor first, and I actually met
George Shumate with Lynn Mortgage.
when I was trying to buy more rental properties, and the bank said, "Bang, you're denied. You cannot buy any more houses." So George, I was trying to buy a rental property, and basically they said, "Look, you're writing off too many expenses on your rental properties. Your debt to income just doesn't look great." And I did that because it benefited me for tax purposes, of course.
Absolutely.
I want to show that these are legitimate expenses and that I pay less taxes. But then banks just like to approve W-2 employees by their income as the IRS states it. And they said, "Hey, you don't make enough money," even though I was making cash flow in all these deals. So tell us, George, what is a DSCR loan and how is it that it fixes this problem?
I'm so glad we're talking about this topic today because there's so many investors that want to enter the market. And believe it or not, I don't need the property to be tenant occupied. So we'll just kind of highlight the key pieces of a DSCR loan. It doesn't need to be tenant occupied. As Aaron mentioned, a lot of investors take advantage of their real estate portfolio and they write off, expenses. If you've got a leaky sink or a roof replacement or an AC, we're going to write that expense off. Well, it makes it difficult because that drives down, the income that the properties produce, which, makes it difficult for investors on a conventional platform to get pre-qualified. The great thing about a DSCR loan is we don't qualify the property on your tax returns or your income. We qualify the property on a 1007 appraisal, which is basically the revenue it generates. And that's what debt service coverage ratio stands for. And so it takes the market rents of the property, so it doesn't have to be tenant occupied. So we can actually do the loan even if it's a refinance. So if you've got people doing what's referred to as the BRRRR method, or they buy a distressed property and rehab it, I don't have any seasoning requirements either, believe it or not. We can actually turn right around, even if we just came in and repainted and put new carpet, and we bought it on like a fix and flip product and we turned around and wanted to refi it into a DSCR to hold, we could do that as well.
Great. So what expenses, like you have to get a projected rent, right? Mm-hmm. Some realtor needs to give you some sort of comp report showing, hey, this property is going to make $2,000 in rent, right? What expenses does that $2,000 in rent need to cover? And do they need any extra buffer in order to get an approval?
Sure. So that basically that $2,000 in rent just needs to cover principal, interest, taxes, and insurance. And so as long as it covers the expenses of the property monthly, then you're good to go for the loan. And a lot of times down to one. So we'd like to see a little bit of reserves, but we can even go below that one threshold. And sometimes there's certain situations where an investor would do that, but commonly you're going to want to make a small cash flow off the property.
Yeah.
And so we'd really like to see it at a debt service coverage ratio of 1.25, and a debt service coverage ratio of 1 means that it's covering all the expenses.
Yeah. So even if it's just barely covering the expenses, but this area is going to appreciate well, you can still get approved for a DSCR loan. That's awesome.
Absolutely.
So what kind of down payment do you need for a DSCR loan, George?
So typically we're going to need 20% down for a DSCR loan.
Okay.
And the nice thing about a DSCR loan too is if an investor has multiple in his portfolio, I have clients that have as many as 200 doors.
Wow.
And so they can continue to keep using these loans. There's no limitation.
Yeah.
And they're fast. I think the fastest we've closed one's in 9 days.
That's interesting. So does this product also work for multifamily properties, or how does that work?
It does. And there's a big misconception in the market where a lot of people think that a DSCR loan is only for a 1 to 4 property. I've actually done these on as many as 15 units.
Okay.
But typically 1 to 8 is, something I can do with no exceptions. But oftentimes I've gotten 13 and 15 approved with exceptions, as long as the cash flow looks good and the property is in good condition. And the client has a little bit of experience. But you don't have to have experience to get these loans. Just in certain circumstances, when we're going like the higher level of the multifamily, they may want to see a little bit of experience, obviously. It's a bigger property.
Good. So let's talk a little bit just about terms. What are you typically seeing right now in the market? Like, how many years is this loan for, the amortization? And then, is it a balloon, or what kind of interest rates can they expect to see on these?
That's actually some great questions. So we have many options depending on what the investor's goal is. So I have interest only loans that'll go interest only for 20 years and then convert the last 10 years. So if you're looking for like increased cash flow, or you're thinking, hey, I'm going to get the cash flow up, raise the rents, get it doing well, and then maybe sell this thing down the road, that might be a good option.
Okay.
We've got 30-year fixed, 40-year fixed options as well. And rates are typically better than a conventional mortgage.
Okay.
And so they're right there comparable. That's a big misconception on these type of loans. People think they may be in like the high nines. I mean, I locked one the other day at 6.99, 30-year fixed.
Mm-hmm. Yeah, no, fantastic. I mean, that's hard to beat right now in this market. So
absolutely.
that's good. So let's just say they want to buy these properties in an LLC, because I know when I was buying homes with a conventional loan, they're like, no, you can't put it in an LLC. It has to be in your name. Can they do that with a DSCR loan, or does that change anything?
No, absolutely. They can, absolutely.
Okay.
And don't think you have to have an LLC, but the majority of my clients do have an LLC because it's considered a business purpose loan.
Yeah.
So they can put it, the title would be in the LLC's name, the loan would be in the LLC's name, and then the investor would just be the guarantor. Now, if you've got a partnership or something like that with multiple folks involved, and I do have clients that have those, that's not a problem at all. We just, basically just need the ID. They would just be all listed as a guarantor on the business purpose loan.
That's great. If you're looking to buy a rental property investment and you're in the Houston area, reach out to us. All of our contact information is in the links of this video, but we'll see you at the closing table.
See you at the closing table.